Good afternoon and welcome back everyone to the Moneycontrol live stream. You're watching Markets with Santo and CJ. Well, it looks like we are set for third consecutive day of record high closing for Indian markets. The Nifty and the Sensex have been able to consolidate the gains from the opening bell, aided of course by some positive cues out of Asian as well as European markets. But it's the mid and small cap where you're seeing the outperformance continue from yesterday. The mid and small cap indices were outperforming, the large cap index, the benchmark indices by quite a margin at this point of time. So clearly, Santo, the setup looks quite good for the middle of the week. It doesn't seem like that the adventure or the sense of optimism has petered out within investors.
Well, on the contrary, CJ, it might sound a little counterintuitive, but when you speak to most people, there still seems to be somewhat of a mood of skepticism more than a mood of positive sentiment.
Right.
Like when you saw it last year, when the market was making new highs sometime in October, the mood was, it was like animal spirits unleashed. Every stock could still double from these levels, anything could happen. And here every day you have the Nifty making a new high, and yet people saying that it doesn't look as if it will sustain. There are any number of reasons dished out why it's unlikely to sustain. I'm myself very skeptical whether this thing can really sustain. But when you look around at all the indicators, they still definitely don't seem to be making a case for the market to go down from these levels. But that said, CJ, I remain skeptical. And a quick check on the FNOQs, long build up seen in futures of GMR Infra and Jindal Steel. Now GMR Infra has been consistently seeing build up of long positions for quite some time now. Short covering seen in Bajaj Auto, BHEL and ICICI Lombard. Stock prices have moved up and the open interest positions have come down somewhat, whereas we are seeing build up of short positions in Canara Bank, India Cement and Glenmark Pharma. Now Canara Bank has seen a good run up along with the rest of the PSU banks, but we are seeing some kind of a fatigue creeping in there as well, given that these stocks have had a fantastic run for more than a couple of months now almost.
Yeah, thank you Santo for those FNOQs. Of course, moving on, our next segment today is dedicated to, of course, just to one sector, and that is the oil and gas sector. A big news emerging earlier today with the recommendations of the Kirit Parikh panel that was formed on having to take a look at the gas pricing formula in India and how gas prices are set in India. That panel's recommendations have now been made public, and clearly it has had an impact within the oil and gas sector. If you look at the city gas distribution companies, they really are on fire at this point of time, probably indicating that the market believes that the recommendations are much favorable as far as those city gas distribution companies are concerned. Now, of course, this panel has been formed at a time when, if you look at gas prices, the past two changes in gas prices, the last one happened in September, the prior to that the one happened in April. Gas prices, natural gas prices in India have seen a jump of over 100%. At this point of time, natural gas prices, or the administered price for natural gas, is about $8.5 per MMBTU. So that clearly there has been a major spike, and therefore I think what the panel was trying to do is try to balance the inflation concerns in the near term with the objectives of increasing gas production in India in the long term. And overall, it will be a little difficult to, of course, pass a judgment at this point of time because the entire report is yet to come out. But from the the key summary of it, it looks like the panel has tried to do a balancing act at this point of time, Santo. And of course, we have to talk about the stocks that it will impact, and I'm sure Santo would be pretty gleeful given the fact that the city gas distribution companies that he has been quite optimistic on, they clearly are the big winners from this.
Well, CJ, the interesting point that you made there about the committee having a very tough balancing act, and whose side do you take actually? At some level, you're also a consumer, right? But the main issue here is that if you keep prices too high, of course, consumers will hurt. But if you try to protect the consumers, then there's little incentive for gas companies, in fact, to increase their production. So it is definitely a tightrope walk for the Kirit Parikh panel there. Now, looking at the gas stocks in focus today, CJ, I think you spoke a little too soon. All three city gas distribution companies are right now trading in the negative.
They had risen, given up their gains.
They rose briefly, but then quickly gave up their gains. And they are not trading in the red at this point in time. Now, clearly the market doesn't seem to be too enthused, and one of the reasons could be that I was speaking to my colleague from MC Pro, Nitin Sharma, who was saying that at this point in time, the demand from city gas companies like IGL and MGL, which serve mainly to the retail consumer, the demand is far exceeds what is there on supply at this point in time. Now the prices have been lowered, right? It was $8.5 and now that's been, the upper ceiling has been set at $6.5, which means that they get some relief on margin. Now what do they do? Again, it's a tricky thing. Either they can say, okay, we pass on some of it to our consumer by cutting prices, or we try to fatten our own margins. Now the risk of passing on the margins, passing on the gains to consumers is that demand then will go up. And the moment demand goes up, there is only so much supply, right, at the end of the day, right? So when demand goes up, again you will have to buy gas from elsewhere, which is from the market rates, and that again becomes unprofitable. Now you can either take a long-term perspective on that, say that, okay, I'll lose some money in the short term, but what I will do is that I will try to win loyalty by kind of passing some of the gains. So that is the tricky part here, but at the same time market really doesn't seem to be enthused about these stocks. These stocks may have bottomed out for the time being, CJ. That was what I had mentioned last week also. Big gains clearly look difficult unless you see gas prices coming off. And now remember, with the open access also kicking in, it means that these companies will have competition in the areas where they currently are monopoly. So things not looking very bright at this point in time. Maybe the worst has already been factored in, CJ, but for once I would say that yes, prices may not fall much, but at the same time they're unlikely to gain a lot.
Yeah, I think clearly what the price cap that the range that has been said about $4 on the bottom, on the lower side as a floor, and $6.5 as a ceiling, that clearly will cap the downside on the margins that was expected. Although let's not forget that MGL and IGL both have done pretty well the past 2-3 quarters to sustain their margin levels, largely thanks to the fact that the government had given them a higher allocation from the cheaper domestic gas pool than the imported gas that generally was coming at a much steeper price. But Santo, I think going ahead, of course, it will be important to see how volumes behave for city gas companies, because let's not forget there are a lot of industries, because of the surge in natural gas prices, especially for industrial companies. I think they had started to switch towards LPG,
and propane also,
and propane as well. So clearly, because of the surge or the inflation in fuel cost, a lot of industrial companies had already started to take mitigating measures. Now, whether they will switch back to natural gas, that remains to seen, and therefore I would be a little skeptical in terms of how the volume impact of this measure will come out. But clearly, the near-term impact will definitely be on the margins, even if they were to retain the the lower prices, Santo, and not pass it on to consumer. That clearly should benefit their margins and their earnings per share in the near term. So overall, seems like a positive. If you look at the past 1 week's performance, IGL, MGL and Gujarat Gas are all higher by about 10% in the past 1 week. So market maybe bought the rumors and maybe selling the news at this point of time and seeing some bit of profit booking on these counters. Well, the other set of companies, of course, now this is the consumer side. These are the consumers of natural gas in the in the country. But what about the producers, your ONGCs, your Oil India and your Reliance Industries? Now for them, I mean, if you look at from a very near-term perspective, clearly this is going to be a negative for ONGC as well as Oil India's gas revenues, largely because at this point of time the administered gas price was about $8.5 for gases that were produced from old oil fields or legacy oil fields. Now this will come down to about $6.5 per British thermal unit. Now we know that from talking to analysts, we know that any $1 change in gas price tends to affect ONGC's EPS or earnings per share by about 5 to 8%. So clearly about $2 impact would overall translate to an annual impact of about 10 to 16% for ONGC on the EPS side. Now this could be mitigated, of course, if the crude oil realizations for ONGC remain higher. At this point of time, ONGC is seeing realization in excess of $75 despite the windfall gains tax. So clearly there could be some sort of offset here from crude oil in terms as against the gas revenues. Also, the panel has not all, gone entirely against gas producers. They have also recommended that gas pricing should be liberalized or liberated in the next 5 years. So 2027 onwards is the date that they have given, that they believe that gas prices should be liberalized, and that, Santo, I think would be the longer term positive that investors will take from this. Also, the panel has allowed companies to take a gradual price increase of 50 cents per dollar, 50 cents per MMBTU every year. So that also should be some sort of a near-term offsetting factor as well, as far as the earnings of ONGC and Oil India is concerned. As far as RIL is concerned, there will not be any impact, largely because of the fact that gas produced from difficult fields have been left out of this sort of a price cap. So clearly, they will continue to receive the premium pricing that they are already receiving from the government. But going ahead, what could be the trigger for ONGC and Oil India? Clearly, the windfall gains tax. Remember, the tax came when oil prices were at the range of about $110 to $115 per barrel. Right now, oil prices, global crude oil prices, are somewhere around 80 to 85. So clearly, there is a case from the industry that the government should probably remove the windfall gains tax, because when prices were at this level, there was no chatter of windfall gains tax at that point of time. So that would be probably the key near-term trigger, but it will be interesting to see how this affects ONGC and Oil India's earnings going ahead, whether it will have a major impact or whether some of the mitigating factors will limit their impact on earnings per share, Santo, going ahead.
Well, CJ, this yet again is a case of policy uncertainty which which investors constantly have to deal with when they are looking to put money in public sector undertakings.
Absolutely.
So this again doesn't come at the right time at all. Investors were just about reconciling themselves to the blow of the windfall gains tax, when now this cap has also come in. Clearly, it hurts companies like ONGC and Oil India in the short term. Now, the longer term intent is noble, definitely, but that again is a good 3 years at least out, right? And market at the moment is looking at the here and now, and that is clearly not good news. And let's also not forget, CJ, whatever we say, whatever the government says, as far as liberalizing prices, fuel prices are concerned, it's always very tough. Whenever prices go up very sharply, there is always the public interests that need to be taken care of, which is why we've been I've covered markets for longer than you have, CJ. So this thing about liberalization, dismantling of administered price mechanism, this has been going on for years. It never happens in the true sense of it.
Absolutely.
And one can't really blame the government for that also,
Right.
to be I mean, if we were to look at it from the other perspective. So this clearly is not leaving the market enthused, and you can again see it in the disappointment. But I think the only good news here seems to be that, CJ, the market has already factored this in.
Exactly.
So you're seeing ONGC stock not really reacting.
Yeah, I think ONGC and
much.
Oil India are actually higher in trade. So clearly, they are not really reacting that much.
So, and this, CJ, as I've
news.
mentioned earlier also, is likely to be a strategic bet from time to time. There will be extreme bouts of pessimism, and then you will see some pullback, stock prices rallying a bit, again at higher levels. The PSU discounting comes into play, or there could be some adverse policy announcement. Now, things may change if, let's say, for instance, crude prices really go up in a big way. That, to some extent, could benefit ONGC, companies like ONGC, Reliance, and Oil India. But there again, let's not forget the windfall gains tax is very much in place. So that is a dampener. So not much to look forward to in these stocks at this point, except that they could be strategic bets from time to time, CJ.
Yeah, but Santo, I think it does not even take away from the fact that at this point of time, stocks like ONGC are still quite undervalued, given the fact that a lot of analysts have argued that at current prices, market is only penciling in average crude oil realizations of about $40 to $45, which is absolutely not true in the case of ONGC and Oil India, because even if you look at it after adjusting for the windfall gains tax, ONGC can easily make above $70 per barrel in terms of average crude oil realization going ahead over the next couple of quarters. So clearly, there is a trade to be had here. There is clearly a price distortion that is in the market, and it remains to be seen whether the market turns out to be right or the fundamentals of the company turn out to be right as far as ONGC is concerned.
Well, and with that, let's take a quick check on the market at this hour. The Sensex is up. It's further built on its gain, and it's up by close to about 460 points. It's made a fresh high. So
yeah, we are heading towards 18,800 now, Santos. Very quickly.
Yeah, so that 19,000 mark which was being spoken at the beginning of the month doesn't seem so far at all. And who would have thought, CJ, just in June when the market had crashed to about 15,100, the rally seemed to be, the party seemed to be as good as over. And in just about 5 months, what a big change in sentiment there.
Yeah, and also I think this is percolating to the broader market as well. If you look at the Nifty mid cap, the Nifty small cap index higher by about 1.2 and 0.7% respectively. So clearly, I think Nifty mid cap also is inching towards this record high now. I think it should not be too far away, maybe another 1,000 or 1,500 points away from this record high. So clearly, there is a big momentum building up in this market at this point of time. Nothing is really phasing the bulls out there on the Lal Street. But the only thing probably that would be a little bit of an offset here would be the India VIX, which has climbed about 2% in today's trade, although it still is quite comfortable at around 13.9, which is a very comfortable level. But it will be worth keeping an eye out on how India VIX behaves going ahead, because that will be an indicator whether some bulls are maybe thinking of taking profits on the money that they have made so far, and therefore they would probably be anticipating a correction in the market and buying put options going ahead.
Well, and with that, the key things to keep an eye out for, CJ.
Well, Santo, the most important event, of course, today would be the speech by US Federal Reserve Chair Jerome Powell later in the evening. That will be, of course, a very key trend setter for the market for the rest of the rest of the week. That is Thursday and Friday. Apart from that, of course, at home from tomorrow onwards, you will have automobile companies publishing their November sales data, and this, of course, will have some bit of impact from the festive period as well. So it will be interesting to see whether there is month-on-month momentum as far as automobile sales volumes are concerned. And of course, we have already started to see some bit of positioning happening on automobile stocks. Whether they deliver on expectation or not, that could have an impact on auto stocks for Thursday and Friday.
And well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thanks for watching, and always also for sharing your feedback, thoughts and queries.
And guys, keep following us on the social media links that you can see at the bottom of your screen. And for the rest of your financial news, stay tuned to moneycontrol.com and download the Moneycontrol app. We'll catch you again live tomorrow morning at 9 a.m. Till then, have a great day.